Perry. He is an analyst at Hantec Markets in London. Great to have you back with us, Richard. Gold, as I mentioned, hitting a new record high. Can you tell us more about what's driving the rally that we're seeing right now?
Well, gold breaking out should not necessarily be unexpected, really. We have had significant monetary easing throughout the major central banks of the world, and that is a driver of gold prices higher. Tends to be the case that gold will perform well when real yields are falling or negative, and that certainly is the case at the moment. Bond yields are record lows, and inflation is still relatively high, and that subsequently means that the opportunity cost of holding gold is extremely low at the moment. So subsequently, in this time of economic uncertainty, that drives the gold price higher. You've also got the fact that currency debasement is a real issue for investors as well. You see fiat currencies or paper currency being devalued around the world, obviously the dollar being the key focus at the moment. And that again means that gold is perceived to be a store of value, and subsequently the price gets driven higher.
We know these markers, the 1800, 1900 and the 2000 mark, they're all psychological barriers really, aren't they? But how much higher could gold go, do you think?
Wow. I mean, we are talking about blue sky overhead now, and gold breaking above the $2,000 mark was a significant event, but it hasn't stopped it. The momentum behind this bull run is incredible at the moment. It has had a significant rally since well, the last 2 years, really. It's actually rallied over 75%. So how much further can it go? Well, as I said, no resistance overhead, and the momentum is behind this one. But we are still starting to look at whether we're getting exhaustion signals, and we don't seem to be getting too many of those at the moment.
Now, when people flock to safe havens like gold, we normally see a significant hit on riskier investments like the stock market. Why aren't we seeing that happen right now?
Well, it all plays into the same equation, doesn't it? Or the central bank's monetary policy easing, the Fed's promise of unlimited quantitative easing and asset purchases. Not only does it boost the gold price due to the points that I've already made, but also it means that investors look at equity prices and think, well, we're going to buy those because the Fed is going to be always in the market. And subsequently, we see that equities bursting higher on Wall Street, predominantly a tech-driven rally at the moment, and driven by all those mega-cap tech stocks such as Apple and Facebook and Google. But we still also see some breadth coming through the market as well. So there is still some strength through these equity markets in Wall Street, but gold continues to run higher.
Okay, Richard Perry in London. Great to get your analysis as always. Thank you.
Thank you very much for having me.